AM 1170. The
It is a perfect.
Welcome back. Welcome back. Do you want to just say it, Jason, so I don't have to?
Your new favorite team, the LA Chargers?
Yes, we are the official home.
No, we are
they don't
not.
even,
No,
they
we're
don't
not.
even have to pay us. We're just so excited about this that we're just going to take it on free.
I refuse to even say that
The
name.
official home of the Los Angeles
Brian,
Chargers.
James, and Cindy, you could see Kyle gets so much excitement. If you could actually see his smile, how he just rubs it into Mr. Hall, he just has so much fun. It's the same thing, and I'll never.
You've been trying for years to get me to be a Chargers fan, and I
know.
finally am, and now you're not happy for me.
I'm not happy for you at all.
Dang it.
Because I know why you're doing it, Kyle. But I will do this. You have challenged me over the years, and we have been very good friends and business people over the years. And you challenged me about 2.5 years ago to run a half marathon in Vegas with you, and I thought you were absolutely nuts. You challenged me. I did it. My knees hurt. My feet hurt. I'd never done a manicure, pedicure, massage, now facials. I get all that stuff down now because, I'm taking better care of myself. But having James in here, James Cassady with State Farm, we like to call him Jake. He won't wear the red shirt and tackies yet because apparently he has so much business he doesn't need to do that. But I wear a Charger shirt because I'm a homer. But life insurance is vital, right? As a mortgage person, we were just talking about during the break, James. People have $300,000, $400,000, $500,000, $700,000 mortgage.
Yep.
Most of the time, there's one who's a primary wage earner, and if that person's gone, even if you're equal wage earners, if you lose that income, people are devastated.
You're losing your home.
You're losing your home.
Yeah.
So what do you recommend? If I have a $500,000 mortgage, what would you normally recommend that I carry as life insurance?
Minimum of $500,000 life insurance policy.
Bare minimum, right?
Let's cover the debt first.
Let's cover the debt so that my spouse can live in the home at least with no mortgage.
Minimally. Okay, so with State Farm, at State Farm, we manage the risks of everyday life. We recover from the unexpected, and we realize your dreams. All right, so that's a really broad stroke of what it is that we do. And we do everything from automobile insurance, homeowners insurance, renters, commercial business, life insurance policies,
Is there
annuities.
any insurance you don't do?
There's a few.
There-
State Farm's a very conservative company. It's perfect for the radio show. We're a very conservative company. So there's some things like we won't insure an explosives factory. Right? That's a little risky for us.
So would you insure the move to the LA Chargers? Apparently the movers are banding together. There's 24 moving companies that
That said they won't do it.
won't do it. And
business
we
is
know
business.
somebody will do it, but think about the marketing ploy on that. They can say, look, if you're a Charger fan, we were one of the teams that band together, did not want to help.
Wouldn't you rather be the company that helped get them out? Like, fine, go.
If you get
disappointed
the name.
anyway.
I want to be the company gets the name. But back to, I'm going to get sidetracked.
We also do banking, so no one knows that. We're a bank as well. So there's a lot of different things that we can do to assist the individual from a one point of contact, one username, one password. Life insurance today, what we're focusing on is something that I think is vital to specifically your industry and home ownership. You want to make sure that your loved ones are protected in that manner. I think a lot of people from a liberal perspective kind of think that like, oh, the government will take care of me if something happens. And that's not really the case. And from a conservative viewpoint, it's like, no, I'm responsible for building my own situation.
Yeah.
And I'm responsible for it. And
you have that game plan.
Whether I am here or not, it is my duty, my ethical responsibility to take care of
family
the
and
family.
kids.
And that's what I signed up for. Right? And life insurance is one of those things that you absolutely would want to, as part of your financial plan.
But what's the formula? I know you said 500,000, my example is a bare minimum, but do you guys say 2-3 times your income? I mean, what's going on? I mean, I've heard different things over the years.
It's all over the board. What I typically look at is I look at an acronym of life. So it's loans, income, final expenses, and education and extras. So loans being your debt. So if I were to die, or my wife were to die, I would not want her to leave me with any debt. Like,
right.
Pay off the mortgage first, pay off the cars, any credit cards, make their life as easy as possible because it's already going to be difficult. Without me, it's going to be very difficult.
You probably have $1 million on her, right?
I've got a lot. Yeah. I'm one of my best clients. I'll say that. So that's the first component. And then the joke is, with my household, that I give my wife 7 years worth of income.
Wow.
Okay. And some people say 30 years. I've given her 7. I've already paid off the debt, but think about this. 7 years. First 2 years, she mourns me. Third year, girlfriends start taking her out for drinks, but she doesn't like it.
I think
Fourth
you're taking
year,
2 days, 3
she
days.
starts
here,
to
man.
like
It's
it.
not 2 years.
I know. Fourth year, she starts to like it. Fifth year, she finds somebody she likes. Sixth year, they get pretty serious. And now she's 7 years older. I mean, she's an old bird. She's going to get married pretty quickly. So I figure I'll give
She's
her
an old bird.
7 years
Mrs.
worth
Cassady,
of income.
are you listening?
Just kidding, hon. But realistically, if I gave her 7 years, and this is my own personal formula of what I've done. Everybody's different. Everybody's unique and they got their own situation. But if I've paid off the mortgage, she no longer has that mortgage and paid off the debt. If I supply her with 7 years worth of my income, we're in the 2-income trap situation as well, like most people. But that income will spread out over a longer period of time if that large chunk is not going towards the mortgage.
Right.
So that's loans, that's income. Final expenses, it's not free. You know, flowers, bring in family members, burial, casket, cremation, whatever. And then education and extras. Am I going to supply any money to my kids or leave a legacy? Like, I had to work for everything for my college, and I'm still paying it and all that kind of stuff. So I'd like to assist. I probably won't pay all of it and do, you know, a $2 million policy and go, here you guys, here's USD, go for it. I want them to earn and learn a little bit. So I've given them a little bit in case I were to pass. It's a protection. And, you know, depending on the different styles.
Why do people not get it? Is it just because what's the cost? Is it the cost? Because the cost usually not that much.
Dude,
right?
it's cheap. Well, and there's
like a term policy you can get for less than $100 a month.
Cheap. If you're healthy, it's cheap.
So if you're a non-smoker, you're in great shape like Mr. Hall, although I'm like 224 pounds, Kyle. Getting down back to my fighting weight.
You'd be a normal Joe, average Joe. You'd be right there, middle of the road. It's
$500,000 policy, just general. Give me a rough estimate. The rates are 4 1/4.
$40, $50 a month.
All right.
Now,
That's not bad.
think about this. Okay.
How about a young guy like Brian?
Cheaper, $24. I don't know.
$25, Brian.
Everybody's situation is unique. His height, his weight, body mass index, blood, cholesterol levels all affect everything. So the healthier you are, obviously, the less risky you are. Obviously, the
so
less
much
expensive.
I still got to get a physical.
It's all affordable. And if you come into my office, we sit down and we have just a conversation and go, okay, what are your goals? What is realistically what you need to do, what you need to cover, why? I think why is important. And then we lay out, I have a plan that staggers and layers policies to make it the most economical, efficient way to cover your needs based upon a period of time. So, like, as I get older, I have more needs. I got married, I got kids, I have the house, I have these payments, and then over a period of time, it's like a bell curve.
Right.
I no longer have, I paid off most of the home. The kids have moved out of the house. I don't need as much. So what I can do is I can strategically put policies in place over the period of time that will cover that bell curve need, and then that can dissipate over the period of time. So in retirement years, you don't maybe need as much.
So like in 40 years, Brian can retire.
Yeah.
So I know you're looking over here, Brian.
Because you don't want to be stuck with a whole bunch of policies.
Right? You're about 40 years away from, 60 years away from retiring. He's going to work forever.
Yeah, and there's basically 3 different styles of policies that I like to educate my customers on that will show them, and I've renamed them and make them easy. One's like renting a life insurance policy.
So that's a term policy.
That's a term policy, right? Because it does a specific need. It covers you for a specific period of time, but when you're done with the policy,
so the house policy is like a whole policy or something?
Yeah.
Okay.
Well, it depends. I go
tell me the 3. So we got the renting. Okay.
Savings.
Okay, the savings like a whole life. Gotcha.
And then equity.
Ooh, what's the equity one?
The whole life.
Whole life as well.
It grows and does some really clever things that you can do.
So maybe savings is a combination of both? Because you guys can do like a term policy and a whole life policy.
Well, the savings
right?
one is really, it's kind of in the middle, but we call it a return of premium product. So a lot of people are going, I'm probably not going to die. What's the probability of me dying? I'm not going to do it. It's a waste of money. Okay, well, I got something for you. If you think that's a waste of money, it's the same policy, same term, same length of time, but you get all your money back at the end of the term. Normally it's gone, right? You've just spent it. It's like renting, you move out, you get nothing back. This one will physically give you all your money back. You get a check back in the mail for $24,000 of what you spent over that period of time. Now, it's the same policy. Obviously, anything that's better is a little bit more expensive. It's typically 2.2 to 3 times more expensive. But if you're thinking about the future and what your financial plan is of the future, why not put money away in a savings account? I mean, you could put it in a bank and get the same return, right? What's the bank's return right now?
Like 0%.
Okay, so 0% of,
Zero.
You could actually put the money away that you know you're going to get back, and the whole time have this life insurance policy that absolutely came alongside of it.
Right.
Why would you not put and set yourself up for the future?
All right. So you've given us some great knowledge on insurance, being part of a financial tool, retirement plan, part of all that.
Right.
State Farm, one of the largest insurance companies in America. You
Fortune 40-something.
Yeah, you guys have been around forever.
Yep.
Why should someone pick James Cassady with State Farm?
From an education standpoint, you've got the commercials that say we can give you an automobile quote in 6 minutes. Are they really, truly, honestly having a legitimate conversation with you, or are you just slamming home the cheapest policy that you possibly can have? Yes, it takes a little bit longer with us.
So you'll talk them on the phone, you'll sit down with them, you'll meet face to face.
Yeah, I'll come to your kitchen table. I mean, I think that's important. That's the old school style of the way the insurance went. Like, let's sit down, have a conversation. You got kids, you don't want to bring them to the office, you work really late hours. I'll come meet you at the home and we'll have that conversation. You're not going to get that with other companies. You will get that with State Farm agents. And that's what sets us apart from everybody else, is the fact that it's this agency. I've got a small group of individuals that you get to know on a first name basis. So I think it's super important to build that relationship, especially if I'm your one-stop shop.
Yep.
If I'm insuring your number one, number two, and number three assets you have in life, right? Number one asset being your family. That's more than the home.
No, the reason I'm laughing is we're getting ready to cut.
Yeah.
And you're a sales guy. You want to keep talking like me.
I do.
Kyle,
number one asset,
Mr.
home.
LA Charger fan.
Number two, home, and number three, your income.
He wants to get in.
I love it. If you want to get connected, James Cassady, State Farm Insurance, give us a call, shoot us a text, 619-663-SELL, 619-663-7355. We can also get you connected with Jason Hall, Chargers homer over at Team Home Loans, Cyndy Higgerson at Whissel Realty. By the way, Jason, they have updated the logo on the website. They got rid of the old LA
Well, they had to
logo
do that
and
since their
updated to a
new
new
coach
one.
was calling himself a San Diego Charger coach, which was funny.
Thank you so much for listening to your home of the Los Angeles Chargers. Whissel Wednesdays here on AM 1170, The Answer.